Good afternoon and welcome to today's exclusive webinar, Path to Recovery, Mid-Year Review and Outlook. My name is Lawrence Domingo, and I will be your host and moderator for this afternoon. But before we begin, I'm sure most of you are looking forward to today's topic, as we have invited two respected speakers who will provide market updates and portfolio allocation strategies that will let you take advantage of the recovery. For those who have questions, even while the presentation is ongoing, we enjoin you to type them in our chat boxes so we can address them later during the Q&A portion. The Philippines economy is expected to recover as vaccination efforts continue. With the economy gaining momentum, we will be covering this afternoon's topic, what will be the leading recovery and what we can look forward to for the rest of 2021. As your trust partner, we know how important it is now more than ever for you to be well informed and constantly be updated on the changes and different strategies that can help you optimize your earning potential. And this webinar series was created in response to that need. So without further ado, allow me to introduce to you our first speaker for this afternoon. To talk about the market updates, outlook, and growth opportunities as we navigate through the recovery, our first speaker today is the Vice President and Head of Research of Credit Suisse Securities. She is a key member of the Credit Suisse ASEAN Securities Research Team, covering Philippines' equity strategy, consumer sector, and mid-cap stocks. She has 16 years of experience as an analyst in the Philippines, covering a variety of sectors, including consumer, telcos, media, and business processing outsourcing, or BPO. She has a double bachelor's degree with honors in management of financial institutions from De La Salle University and in economics from Ateneo de Manila University, and was rated the top analyst for Philippines consumer, telcos, and midcaps in Asia Money for more than 10 years. Let us all please welcome Ms. Hazel Tanedo. Hazel?
Thank you, Lawrence. So we'll talk a little bit about Asia first, delving down into the ASEAN markets and down to the Philippines, which is the prime focus for today. So thank you for having me. Let's start. So the top-down picture for Asia is a bit mixed right now. Our global strategy team expects, inflation to continue surprising on the upside and for the dollar to weaken moving forward, both of which tend to boost Asia and ASEAN markets in particular. But there's a lot of headwinds that remain very significant. You have slow vaccine rollout that limits short-term upside for the ASEAN countries that's highlighted there in the chart in front of you. So we anticipate just a 35 to 40% vaccination in the Philippines by year end, 40 to 50% for Indonesia, 50 to 60% for Thailand, and 70% in Malaysia. So assuming a 70 to 75% vaccination is required, the ASEAN 4 countries, which includes Thailand, Malaysia, Indonesia, and the Philippines, might not fully reopen until the first quarter of 2022 or beyond. Singapore is the outlier with APAC's highest vaccination rate so far. However, if you look through the numbers, APAC's most attractive value has the most attractive valuations. If you refer to the charts in front of you, the 5 ASEAN countries ranked as the 5 cheapest markets on our APAC valuation scorecard, PEs and price to books and dividend yields for ASEAN countries are all unusually very cheap right now relative to the region. So although its revisions are relatively weak, ASEAN boasts the fastest EPS growth in absolute terms this year and next year. So ASEAN markets account for 4 of the top 5 APAC countries for two-year CAGR EPS from 2022 to 2022 and 5 out of the top 7. So ASEAN also has the best structural story. I mean, we're from the Philippines and we know that among emerging markets, ASEAN has the best demographics. Penetration of credit and key consumer segments like modern format and retailing are low, as you can see in the next 2 slides. Although slow vaccination should hold the Philippines back in the short run, on a medium term, we see the best opportunities in the Philippines. It has one of the region's best demographics, lowest penetration of credit and key consumer segments, and ranked 3rd in our APAC valuation scorecard. So consensus expects the best EPS growth in Asia over the next year. Malaysian stocks could start to move before Indonesia and the Philippines, but political uncertainties and the fiscal overhang and slower structural growth makes it less appealing to investors. Thailand appears the least attractive in ASEAN. After its outperformance year to date, Thailand's valuations are now ASEAN's least cheap in our measure, and Thailand's heavy tourism exposure could lead to a slow recovery for them. And that's why we expect that, for at least the ASEAN four, it's the Philippines that has it's the most attractive country for us to invest in currently. So the Philippine index, if you look at how the country has done so far, right? We've had a good run, except for the past week where there were some troubles with inflation, forex, and even the Delta variant, which we'll discuss earlier, which is why we saw a bit of correction this week. But overall, if you look at the past 5 weeks, the index has been relatively up, roughly 10-12% on rare foreign buying. Despite this, foreign positioning remains extremely light. If you look at the right-hand chart there, the aggregate foreign ownership of listed stocks is still at a decade low of around 21.8%. Whereas if you look at the 10-year historical average, the Philippines should have foreign exposure of about 27 to 28%. So despite its run up, the market is still very cheap. If you look at the left-hand chart there, we're still trading at a 16.8 times forward PE versus a 5-year mean of 19.5 times and the 10-year historical average of closer to around 18.8 times. So recent vaccine developments and declining new infections are tailwinds to the reopening momentum. And this is the key critical driver. In fact, we've spoken to a lot of government officials, from the BSP to the DOH to the NEDA, and basically their growth expectation of 6 to 7% for this year all hinges on just two things. One is vaccination, and two is mobility. So after months of missteps, fits, and starts, the Philippine COVID vaccination effort is finally gathering serious momentum. So our latest tracker shows some positive development. Number one, vaccine rollout is gaining momentum and is expected to accelerate in the second half of this year. So as you can see from the latest data, the Philippines has already vaccinated more than 13 million people, and that's a very good number for us, right? But what I'd like to share in this call is that the government has sort of shifted focus already in NCR plus, and that's even more positive for us, because instead of trying to hit herd immunity for the whole country, the government is now focusing their efforts on NCR plus, hoping to reach a 70% vaccination rate before the year ends, or by November of this year. Second positive development is that positivity rate is down to 13% versus peaking 25% in April. Hospital care utilization rate also fell to 36%, with ICU occupancy rate of now just at 49%. So in the next slide, we'll show you, if you look at the daily new COVID cases, they've slowed down quite a bit at just 5,500 per day, with new infections reported on average each day to have slowed down already from peaks of 15,000 last March. I'm sure you recall those times when it was hitting a peak of 15,000 per day. While Visayas and Mindanao and parts of Luzon are experiencing higher numbers of daily new cases, I think it's important to note that if you just delve down to NCR, the number of cases have actually dropped down already to just 500 to 800 per day. So we expect over the next few months, for at least until the year ends, for at least 102 to 127 million vaccine doses to arrive in the country between now and December. So again, to achieve herd immunity, the DOH has given already some back of the envelope computation that they will need to vaccinate 120,000 people per day. And so far to date, they've been vaccinating roughly 300,000 people per day, which is a very positive sign that their target of vaccinating herd or reaching herd immunity by November of this year is actually quite doable moving forward. So a lot of the country's efforts to reopen. Again, as I've mentioned to you earlier, there's two factors we're watching out for. First is vaccination. Second is mobility. So a lot of the country's efforts to reopen the economy hinges on vaccination. If you refer to the chart there, mobility activity has actually showed great improvement in June. Activity in retail and recreation areas, including restaurants, cafes, shopping centers, theme parks, museum, libraries, and movie theaters, it's improved a lot and is now just 22% from a baseline sample in June. When I say baseline sample, it's basically pre-pandemic levels. If you look at the workplace mobility, it's also improved to 12% below the baseline sample. Just to give you a comparison, 3 months ago, that was closer to 38% below the baseline sample. And I think what's interesting to note here is that if you look at the mobility for grocery and pharmacy, people are practically going to the groceries again, and it's actually 19% above the baseline sample. So inflation would be our biggest risk, actually. We flagged inflation. We've been flagging this as a risk since February, when domestic pork prices spiked due to the African swine fever and the typhoons that hit late 2020. So the Philippine government, they've stepped in, allowing for higher import limits for pork, which has seen food inflation moderate in recent months. However, global food prices are still on the rise. And, as the world's largest economy still try to recover, we're seeing a bit more uptick on global food prices. And as the Philippines is a net importer of everything from wheat to sugar to soybeans to palm oil, food inflation could stay elevated or even re-accelerate into the second half of 2021. So the Philippines also imports virtually all of its oil and the vast majority of its coal requirements. So both commodities have risen sharply in the recent months. So while the direct impact to CPI is minimal, the second round effects of rising transport and electricity rates will likely affect the broader consumer basket. Again, inflation could prove to be an unwelcome drag, given that personal consumption accounts for 70% of our GDP. So another thing to note is that elevated inflation will also limit the tools that the BSP can employ in the support for the economy. So while it's kept policy rates flat, the BSP has allowed the longer end of the curve to rise. So that said, with inflation at 4.5%, real interest rates are still deeply negative, even out to the 10-year maturity. So the BSP seems keen to maintain an extremely accommodative monetary stance to keep rates where they are right now. Peso is another thing that's, the favorite discussion the past week. It remains vulnerable, but strong remittances will definitely help. So an often asked question from investors is whether the Philippine peso is driven more by remittances, or broadly speaking, the current account balance, or by bond yields. So some analysis that we have run shows that in the past few years, the Philippine peso movement has been more correlated with overseas Filipino workers' remittances, i.e. part of the current account, than with the bond yields. So remittances to the Philippines are actually stronger in December as workers send their overseas, income back home during the holidays. So since 2017, the USD PHP forex or forex exchange rate has started to see stronger seasonality in December. So one possible reason might be that the Philippines, political and macro stability has been improving since then. Hence, we infer that given our expectation of persisting macro stability in the Philippines, the correlation between the FX and remittances should remain. So since we've been seeing very strong, inflow of remittances, I think the latest print was around 5.5 or 6.5% growth. Versus the government target of just 2%, we expect that to provide a little bit of support, and we remain the view that the Philippine peso is rather a defensive currency amongst its peers, given first, macro stability, two, robust remittance inflows, and three is the lower dependence on tourism income, like what I mentioned earlier about Thailand compared to other countries. So these characteristics should allow for Philippines to stay relatively stable moving forward. Again, if you look at remittances, it's one of the things that, we think it's helping the economy quite a bit, the past year to date. Remittance and unemployment are currently very stable. If you look at OFW remittances, as mentioned, it grew very strongly at almost 7%, besting, market expectations of just 2%. I think to the extent that remittances, as mentioned earlier, correlate to the FX, we're also expecting the FX to remain quite stable. Infrastructure spending is also something that we'd like to discuss. Spending on infrastructure and social assistance, better progress in the country's coronavirus vaccination drive. These are all factors that would help us help the government keep its growth target for GDP to grow at 6 to 7% this year. So before we move on, right, to the sectors that prefer, there's a general consensus or feedback I've been getting. We've been doing a lot of marketing on the Philippines the past few weeks, and there's a general consensus that the market is not really putting too much weight of late to these economic indicators that you see in front of there, because to a certain extent, people already know that there's going to be better earnings growth this year because we're coming from a very low base last year. Apart from that, there's a lot of noise politically, but it's further down the road. The presidential election will happen in 2022. But definitely, a lot of focus is just placed on the vaccinations and mobility. That's why we started our presentation with that. So we believe that the upcoming 4 weeks of COVID-related data will be critical. And you saw that, right? When the Delta variant, was announced last week, you see the market, correcting in a big way. So these critical drivers or these COVID-related data will be critical over the next 4 years, as it will likely determine whether the lockdown restrictions will extend until, it will extend further after July, or whether the economy will start to open up little by little. So we expect corporate earnings growth for the Philippines to be at 36% for this year and 24% for next year. And so far, given the first quarter results, it seems like a lot of the companies have not yet moved the needle much in terms of revisions. So we think that most of the companies are slowly hitting their targets. It's not like last year when the lockdown was imposed, where a lot of companies were missing their estimates. Why? We've been talking to all of these consumer companies, property companies, bank companies, and a lot of them are already prepared and made a lot of changes last year in 2020. So now that the lockdowns were reinstated last March, they were more ready. More ready in what sense? They have, they have fortified their delivery platforms. They've fortified their e-commerce platforms. They're now doing a lot of different things like virtual tours for property companies and the like. So it's looking increasingly likely that, vaccination rates are set to improve dramatically from here. As I've mentioned earlier, we had, calls with the DOH just last week, and it seems like we're ranking very highly on the vaccination side. So that's why if you look at our sectoral picks, we choose to start investing in what you call mobility plays. So what do I mean by mobility plays? I'm referring to restaurant operators. Within the cyclicals, banks' profits are also likely to recover faster than those property companies, owing to the overhang from the departure of the POGOs. NPLs ratios for banks we cover have so far proven much more benign than the industry average. So lower provisions could be a major source of upgrades for consensus estimates moving forward. So while a recovery in loan demand in 2022 should relieve the NIM pressures that we're seeing this year, we think that banks should be starting to look interesting at this point. For real estate, again, the departure of the POGOs hit the property companies a lot, but so far we've been seeing improvement in mobility in the mall operators as well as the office occupancy, which has been improving quite a bit the past few months. So upside will come from the BPOs, as operators have already expressed interest in taking vacated space, but are waiting for the rules of less stringent lockdowns before they start operations again. So that said, I think that at least for the property companies, we're leaning towards the mix of those that have higher exposure to either retail operations and office operations. And lastly, for tourism, it's going to be the last to recover. Tourism, you have some gaming plays like the airline companies or the gaming companies. This sector will benefit from mobility, but it will be the last to recover. When I say last, it'll take another 2 years for this sector to bounce back to pre-COVID levels. There's a dependence on international tourist dollars. There's a dependence on tourism as well. So I think earnings recovery for this sector will be slightly delayed. So to sum up, what we discussed, the past 2 minutes, I think our preference right now is to build positions on mobility plays. And I think I would start with the consumer sector as well as the banking sector at this point. So I'll stop here and pass the floor over to Don.
Thank you very much, Hazel, for the insightful presentation. Once again, we would like to invite everyone who has a question for our presenters to key in your queries in our chat boxes, and we'll be discussing them later in our question and answer portion. Now, we'd like to introduce to you our next speaker for this afternoon. He heads the Portfolio Strategy and Advisory Division of Metrobank's Trust Banking Group. His team specializes in strategy formulation, asset allocation, and portfolio construction necessary in managing the various portfolios managed by the Trust Banking Group. He is a CFA charter holder with 10 years experience in banking, investments, and asset management. Here to discuss what are the portfolio allocation strategies that investors can use given the current market conditions, let us all welcome Mr. Don Hernandez. Don?
Hi, Enzo. Thank you. Thank you for that introduction. It was a very beautiful piece that's coming from Hazel, and I'm here to, give the audience some type of information. How do we process everything? What kind of investment decisions can we do based on the information that was presented a while ago? So let me start first with the key takeaways for this one. Okay, can you give me a second? There you go. Okay, the key takeaways that we can get here is that one, the improving vaccination numbers across the globe is good news. Okay, sustained growth of thematic stories are there. Of course, Hazel was mentioning about mobility plays. She was mentioning about technology, the rise of technology. Online businesses will be there. So if we can find investments towards those themes, then we will be well positioned for that growth. And of course, a better medium-term outlook for emerging markets, including the Philippines. Of course, there are risks that are emerging, the Delta variant and all. But a medium-term perspective, about 2 to 3 years, it should be a very good story for emerging markets, including the Philippines. Okay, but before I give you, where to put your money, I would just like to remind everybody about the investment path. So if you were here or if you've attended the very first webinar that we had presented sometime in October, November last year, you would have remembered that I made a in-depth discussion about the investment path. And basically, what we're saying here is that when it comes to investment decisions, when it comes to portfolio decisions, you should always remember to stick to your investment path. And you will always have to remember, first and foremost, you have to know the purpose of your investment. Give me a sec. I think somebody's. Hello? All right, that's better. Okay, so first and foremost, the purpose of your investment. Okay, you have to identify for which purpose or what are your plans for your investment fund. Is that for inheritance to your heirs? Is it for schooling? Is it really just for income? Is it for liquidity, for payment of an expense in the next year or 10 years from now? You have to be clear about the purpose of your investment. Before you can create a portfolio, first things first, ask yourself, what is your wealth for? The second thing that you have to remember is that you have to understand what your appetite for risk is. So you have to check what your capacity is in, getting risk, as well as your actual willingness to get risk, no? And it is very important that you understand that your risk objective is as important as your purpose. So if your purpose is really to earn, just earn money, simplistic, earn income. But it's difficult to make decisions if you stay to that. Maybe you can just go for what's trending right now, right? But at the end of the day, you have to understand, what can I take in terms of risk? How much fluctuations in terms of the money that I've invested can I take on a day-to-day basis, on a week-on-week basis? So these are the things that you have to ask yourself. And the third one, in your investment path, you have to remember what your time horizon is. Remember that investing is a commitment. Okay, so that means do not easily say to yourself that you can invest for 5 years if you really can't, diba? So time horizon, if you say 3 years, if you say 5 years, commit to that. That is something that you have to stick on. And the last one is, of course, hurdles to consider. Make sure that you consider each and every hurdle that you have in your financial goals. So if you have taxation issues, if you have residency issues, liquidity issues, preferences, you have to consider that when you're making your portfolio. Okay. Now, that's your portfolio construction. You have to diversify your portfolio. What you see in your screen is a hypothetical 100 pesos growth, grown over a specific number of time. No, the green line is your Philippine stocks. Red line is your bonds, and the blue line is it's actually a straight line that basically just earns time deposit over the past 10 years. No, and what you can see over the period is that, you know, deposit just flat, no fluctuations in prices. You'll earn about 5 pesos over the past 5 years. The next one is the bond price, the red line. It's a little bit crooked compared to the blue line, but it gives you a better blue line. The green line in Philippine stock may give you some returns that may be optimal midway of your investment horizon. If you've committed to your investment horizon, your equity asset class would actually help you. Now, why am I showing this? What construction? Remember to diversify. You can't expose yourself to just a single asset all the time, no? Because there's such a thing as a portfolio where you balance out the risks and the returns that you expect for your portfolio. So if you're looking at this solid line in the middle, that is a mix of 10. Hi,
Hello,
I
Don.
think I
Yes, yeah, I think
have
we lost you for a minute.
connection issues. Enzo, can you hear me?
Yes, now very, very
Yeah,
clear.
sorry about that. I guess I'll come back to that. Um, all right. So the final point that I
The
was saying
previous
about
slide,
this
yeah.
portfolio construction is that a well-diversified portfolio will endow you with a more stable rate of return over time. Okay. So let's move on to what are the investment decisions that we can do when it comes to the information that was just presented. Now, how do we construct our portfolios? Now, we can't really peg you into one risk profile every time, no. So it actually moves depending on your purpose, depending on your investment path. But if you're looking at three simplified portfolios: a conservative portfolio, a moderate portfolio, and an aggressive portfolio, you can see there some type of some diversification at play here. I apologize on what's happening on the screen. I think there's been an issue on the layout. But nevertheless, if you're a conservative investor, might as well stick 100% into money market. If you're a moderate investor, 90% can go for fixed income. And the purple line is 10% worth for money market. For an aggressive portfolio, you can have nearly equal amounts for Philippine stocks, the blue bar. The red bar is for The red portion or red allocation is for offshore equities, and the green allocation is for your fixed income allocation, and a smaller amount for money market just so that you have liquidity. No? So again, this is a sample portfolio for a conservative, moderate, and aggressive portfolio. But what are our options now? When you go to Metrobank, how can you just say, hey, Metrobank, can you help me construct a portfolio? But in fact, you really have options here. No? The UITFs that we have in the branches or with your relationship managers, yeah. For conservative or for the purple allocations in these three donut charts, you have the option to go for the money market or the short-term funds, which are basically a mix of time deposit and treasury bills and some corporate issues, but the duration or basically investment horizon should be less than 1 year. Okay. For your Philippine fixed income allocation, the green bar here, you actually have an option whether you want to go to Philippine peso and US dollars. But for the Philippine fixed income, you have an option for the Metro Max 3 bond fund and the Metro Max 5 bond fund. So if you're a moderate investor or moderate risk investor, you can put your money in the Max 5 bond fund or Max 3 bond fund up to 90% of your portfolio. For your US dollar fixed income allocation, you can go for the Metro Dollar Max 5, which is Philippine sovereign bonds and corporate bonds, the Metro Dollar Asian Investment Grade Bond Fund, which would look into Asian investment grade that includes in Indonesia, Philippines, etc. Metro Dollar US Investment Grade Corporate Bond Feeder Fund, which feeds on an ETF that basically tracks US investment grade corporate bonds. That can also form part of the green allocation in these bars. No, so for an aggressive portfolio, you can put in 35. You can actually do a mix. 17% in the Philippine fixed income, 18% in USD fixed income. You can play with it. No, and for your more aggressive allocations, we do have mixed allocations here. We do have funds that have mixed strategies. You have the Metro Balanced Fund and the Metro Unit Paying Fund that have both fixed income and equities. So mind you, if you enter Metro Balance and Metro Unit Paying Fund, please understand that there are equity exposures for these funds. So you have to make sure that your risk profile matches the investments. And of course, in the more aggressive portfolios, you can put 30% in Philippine equities. So we do have the standard Philippine Equity Index Tracker if you want to just track the performance of the Philippine Stock Exchange Index. And you can use the Metro Equity Fund, which the goal is to beat the PSEI index, no? And the Metro High Dividend Yield Fund if you think that some conservative or a little bit defensive strategy is in play for your portfolio. So that's 30% of your portfolio. And the last 30% for your aggressive portfolio, you can go for offshore equities. No, you have the Metro World Equity Feeder Fund, which has done stellar for this year. You have Eurozone and Japan trackers, which basically tracks MSCI indices for Eurozone and Japan. And we've read some analyst reviews that it's actually a bit rosy in the future for Europe and Japan. And of course, if you're one with a gang who basically still looks at US, S&P 500 tracker is there also to be laid down as an option for you. Okay, so that's my last slide for my portfolio allocation set for this webinar. So again, just to make a quick wrap up on everything, always stick to your investment path. Make sure that you know your purpose and you know what's your appetite, what's your risk objective. You know your time horizon and what other things to consider for your portfolio construction. And I presented you with the options, and I guess I'll turn that over to Enzo already. So Enzo, all for you, please. Thank you.
Thank you, Don. The presentation is very informative, so thank you for giving us your insights. So we'll be moving forward to our panel discussion. We'd like to invite Hazel back for the question and answer. Hazel, are you
Hi.
here?
So yeah,
Hi.
I'm here.
All right, so let me just check my the chat box if there's some question. Okay, for our first question is for Hazel. What do you think will drive consumption back to pre-pandemic levels?
A lot of things, right? So right now, I've already harped on the fact that I really think vaccination is something very important for the Philippines because without mobility, basically there's no consumption. Mobility equals consumption. The truth is, here in the Philippines, GDP is still driven. 70% of GDP is consumption. So what will drive that is for the government to increase the efforts on vaccinations even more. Truth be
Mhm.
told, the problem we're having now is more of a supply issue, right? I mean, we have 125 million doses arriving from now until December. But the problem is, at hand, we only have around 17 to 18 million. And most of it are already, allocated for the population. So if the government is able to vaccinate at least NCR plus 70% of NCR plus by November, which is the goal, I think that eventually you'll see mobility restrictions lifted. There are, some news articles which are a bit scary, to be honest, saying that, Duterte is planning to extend the lockdowns until the end of the year. That will really script down on spending because spending is not just online, right? Spending is not just what you buy in the market, in the supermarket. Spending is overall, right? If you go out and spend on um, different things, whether it's on property or cars or motorbikes. So definitely I stick to the fact that, mobility equals more consumption. So our view is that mobility will start improving in the fourth quarter of this year and the first quarter of 2020. So going back to pre-pandemic consumption will probably happen in 1Q of next year.
Okay, thank you for that, Hazel. Another question for you, Hazel. What sectors do you think are looking interesting at this point? How were they able to adapt to the change brought about by the virus?
So there's actually a lot of changes, right? Especially for the companies that we cover. The pandemic has, soiled a lot of businesses, particularly the face-to-face service industries, But some companies are managing to rise above that disruption and adapt to the new normal. So what we've noticed among the sectors that, we've been talking to, that we've been keeping updates so far, is that a lot of the consumer manufacturers, retailers, service, telecommunication companies are five trends that are shaping a lot of companies right now. First is obviously everybody knows going digital. So what some companies have realized is not all services need to be provided in person, especially in the era of internet, although it's very slow in the Philippines, as I think Don experienced earlier. High quality digital cameras, cloud computing. So a lot of companies are trying to work around this. We have now 3D virtual tours for property companies. So they've replaced a lot of the personal tours that many real estate agencies have done. Tourism companies have also now moved to virtual tours. Doctors have expanded their use of telemedicine. Similarly, beauty consultants, home organization companies, teachers, personal trainers, they've all moved from the hands-on session to video conferencing. Second is the adoption of omni-channel retail. This is very new to the retailers, and it's something that, for me at least, seeing some development countries already adapt this as early as 2-3 years ago, it's quite comforting to see that the Philippines is finally accelerating their progress in the omni-channel side. So what do I mean by this? The digital transformation does not mean the end of the physical stores, right?
Mhm.
Omni-channel shopping models allow customers to browse products, order, pay online, see whether the local stores have inventory available to choose and pick from. So those retailers that have adapted, to this kind of omni-channel retailing are actually doing quite well the past 3 months. Restaurants have also pushed and polished their delivery platforms, which would allow them to still service customers amid the pandemic. In fact, for McDonald's, for Jollibee, for the big food service companies in the Philippines, delivery is now 40% of their overall revenues. Third is providing services outdoors. We've been seeing this for restaurant stores, gyms. You have a lot of these al fresco outdoor tents, electric fans, plexiglasses.
Mhm.
So a lot of them are adapting to the pandemic by offering more outdoors. Fourth is what I call cleaning up their houses. And we've been seeing this in a lot of companies. A lot of companies, prior to the pandemic, very asset heavy. They have a factory left and right. It's not even, operating at full capacity. So what happened during the pandemic is a lot of companies realized that an asset light business model works. And a lot of
Mhm.
Filipino companies have, been operating a lot of inefficient assets. So a lot of them have rationalized a lot of the, commissaries, factories that, are not really contributing to top line. So right now, if you look at the balance sheet of a lot of the companies under our coverage, it's comforting to see that, they now have the firepower and they're ready, once the economy reopens, they actually have the firepower to invest in more. And last, fifth, with the advent of work from home, online learning, a lot of telecommunication companies and broadband service providers have upped their games. This would allow for more sustainable internet platform moving forward. And hopefully, since we have one of the highest in terms of pricing, we have the most expensive internet across Asia. Hopefully, that would bring them down. So, I guess, are these steps useful for the sectors that are lagging behind? Definitely, yes. I believe that the pandemic has brought about a new normal, and the new normal way of doing business will change indefinitely. We don't expect it to go back to pre-pandemic. So those that will adapt will come out stronger, and those that don't will get left behind. So that's the sad reality.
Wow, thank you for that, Hazel. We
Yeah.
still have a couple of questions. This one is for Don. What point of view should a beginner investor adopt when it comes to investing in times like this, where COVID-19 is constantly in the news?
All right, that's a very good question, for beginner investors. Where this is the time where actually a lot of people are very interested in investing. Um, the, I would always go back to what I said a while ago on the investment path. Now, whether you're a beginner or whether you're a veteran in investing, you will always have to go back. What is your purpose in investing? What is the appetite for risk? What is your time horizon? And what are the hurdles now? Even if you're a beginner, and basically you're telling me that you can invest for like 10 years and just leave your money there, then even if you're a beginner, I could really recommend that you put some of your funds in equities. No, it doesn't stop you whether you're a beginner or not. As long as you can take the risk, as long as you can take the time and commit to it, over a period of time, equities will do well. No, times like this, when there are crises, when there are markets that are actually falling, these are always, I don't want to use the word temporary or transitory, but it always recovers naman after a while, no? So even if you get caught on the top or, bumagsak pa siya after this, after your investment, don't be afraid. Because if you can hold on to at least 5 or 10 years, um, then these markets will recover anyway, and you will be able to bear, to get the fruits of your investment. So that's how I will approach it, no? So investment path, what's your purpose and how much can you take?
Okay, thank you for that, Don. Another question for you. What asset allocation do you suggest for individuals nearing retirement, factoring now that there are upcoming rates or REITs in the market and given interest rates are not attractive?
Yes, okay. For REITs, for REITs, for those who are retiring actually, no. So I'm assuming that that question is for people who will be using their wealth for their sustenance and the entire retirement now after they've retired. So unfortunately, I cannot recommend a huge amount in equities, no. So if you have a huge space, a little bit in equities can give you a kick there. Now, the real estate investment trusts, so we do have that in our investment universe for our discretionary portfolios. It's actually a good investments for those who are an alternative. For those who wants to live on interest now, of course, the property sector, and I think Hazel can add something for this one if she would like. But the property sector, at least those who are launching the REITs, are actually having a good rentals and good occupancy rates. And you know, even if time goes by or the prices increases, basically their rental rates or escalation rates are going higher anyway. So in terms of interest, they do have a 90% payout requirement. So whatever they receive as rental, they have to pay 90% of that to the investors. So yes, REIT is a good substitute for you for fixed income. No, Of course, I would have to make the disclaimer that this is still a common share equity format, meaning it is listed. It has to. You have to make sure that you understand the risk with this specific instrument. But setting aside interests, meaning interest income alone, then yes, you can use this as a good substitute for fixed income.
Okay, thank you for that, Don. Another question for Hazel. What is your view on policy rates? Given inflation is creeping up, will the government raise rates?
Well, we continue to expect the BSP to remain on hold at 2% until mid 2020 due to the increased downside risk to the economic growth. So they practically, in easy terms, they have to support the economy. While food prices remain a concern, inflation is likely to stay above the policy rate target in 2Q. So weak employment would help keep domestic demand pressures in check. The country officially began, its vaccination, as I've mentioned to you, and as the economy reopens, we're more hopeful that the rebound of the economy will happen soon. But in the meantime, the government has already indicated that at least in the next 8 to 12 months, they won't be changing the rates anytime soon to support the economy.
Okay, so thank you for that. Our last question for today would be for Dawn. Is it a good time now to invest in dollar investments if the funds that I have are still in peso? Do you still see an upside in the US equity market?
Okay, let me try to break down the question. So, um, the question is the investor is invested in Philippine peso, and of course, the question is whether to diversify the investments offshore. No, if you can take profit or a little bit of loss in your Philippine equity portfolio, then yes, you can diversify. No, currently in terms of the dollar peso exchange rate, yes, specifically since President Biden sat in the office now. So the entire dollar strength story has already been there. And of course, the most recent reasons that Hazel mentioned in her presentation actually provided more kick for the dollar peso to go up to 50 and 50 and above now. Now, the second part of the question is whether or not you can invest in US equities or
Yes.
in yeah. Well, I will have to be honest, no. I've been burnt before by saying that the S&P 500 is already topish now. I said that when it was at 3,000. But nevertheless, you know, um I would have to answer it in a way that what Hazel mentioned a while ago, what struck me the most is that the growing themes across the globe is there. No, so if you can be more selective in what parts of business or the economies you can invest in, whether it's in the U.S. or any part of the globe, then you should be well positioned for the recovery. So that means you can still go up for the mobility trends. You can go up for incoming technologies, things like that. No, so you can even go for health and healthcare innovations or any kind of innovation that is. You can always go for that. No, and the U.S. is usually a big part of those themes. No, so um, a little portion can be put in the we do have an S&P 500 tracker, and it does cover some of the themes that I mentioned. So yes, you can diversify to that, and hopefully in the next few months when we expand our product suite, there will be more options for our clients that they can allocate their assets to.
Okay, thank you for that, Don. And it seems that I'm wrong. I think it's not the last question. So there's more questions from our attendees. So it seems that they're really interested in the topic. So this one is for Hazel. Why do you think remittances remain strong?
Yeah. Well, basically, we've been seeing remittances strong. Most of it are coming from the Middle East. And, we all know how oil prices have been behaving. So a lot of these economies that have already reopened, that are doing very well, are actually rehiring a lot. In fact, if you look at the number of deployment repatriation of OFW Filipinos, it slowed down dramatically, and we've been starting our deployment ever since 3 months ago, which means that a lot of the other countries that have already reopened, i.e., you have the Middle East, you have the US, a lot of Ws again, and of course, since they can't come home, a lot of pesos saved on the travel fare, the money that's being sent to the Philippines has actually increased a lot. The second factor would be the seafarers, right? A lot of trade activity has already begun. The seafarers are already out doing their thing, and a lot of them have been repatriating a lot of these remittances as well to the Philippines. It's sad that it's the Philippines that has the longest lockdown in the world, and most of the other economies have started to, reopen their economies. But at least, with a lot of the Filipinos or OFWs engaging in the activities in these reopened economies, we're also benefiting from that.
Okay, so thank you for that, Hazel. Another question for Dawn. What is your advice toward investors who have a habit of looking at the status of their investments on a daily basis?
Okay. I think a lot of people are like that now. No, good question. No, I guess I will answer that by differentiating trading and investing. No, trading is a type of an investing activity. No, investing is purpose driven. You have a purpose on how to use your money, so you invest it in a manner, in a certain manner. No, trading on the other hand, your main purpose here is to actually gain income. No, and of course it's actually, to simplify it, it's actually buy low, sell high, things like that. No, so if you're trading and you have that small portion in your wealth, and I assume and I hope that your trading portfolio is only a portion of your entire wealth. No, I hope you're not trading your entire wealth for that for that purpose, but a small portion can be used for trading. And if you're checking out the markets on a day-to-day basis, then yes, it's a little bit stressful, no? You have to make sure to keep into that information. The key to trading is actually getting as much information as you can and deriving that information to an investment decision. But if you are more into a purpose-driven investing, you're not really trading, then I do suggest you don't look at the markets too much. No, you can take a look at it on a day-to-day basis, but if it stresses you out, don't. No, if you're give your investments time to actually grow. No, if you're really investing for the long haul, if you're not really there to buy and sell midway or intraday, then protect your sanity, and try to relax. And eventually your investments will actually grow, just given the time that you've committed for it. If you've committed 5 years for that, commit to the 5 years. Take a look at it on a quarterly or annual basis, but don't stress yourself too much about it, because investing is you have to invest time with it also. Okay, that would be my answer to that.
Hey, thank you for that, Don. Actually, it's a good advice because I'm also guilty of that, of looking at my portfolio lately. All right, for Hazel, COVID cases have increased again in the US and other countries. Will this have an adverse effect on the incoming vaccine supplies for the Philippines?
Well, it's quite timely, right? Your question, because we just spoke to the DOH last week. The latest update we got from the Department of Health and the AITF last week is that the vaccines that are set to arrive will arrive on track based on schedule. Even with the spike of cases in the US, the sources of our vaccines are actually mixed. So we have 17.5 million doses, if I'm not mistaken, at hand. That's mostly Sinovac, and we have a lot of Pfizer and Moderna coming in over the next few months, but it's a mix, right? You have AstraZeneca, Covax, Sputnik V. So there's 7 different brands coming from now until December. It helps that, the private and government partnership has, it helped out a lot. So an example would be the recent Moderna vaccine, right? The Philippines has secured a total of 20 million doses of Moderna, and the first batch already arrived, with 13 million of them procured by the government, 7 million for various private companies pulled through the ICTSI group. And so far, it's panned out. We did receive the Moderna vaccine. I was part of that group, so I received my vaccine 3 weeks ago. So to add, the move to augment the private sector's vaccine supply is intended to scale up nationwide vaccine. So the fact that the private sector is also helping, I think has proven to be quite beneficial for us. So the answer would be no. I think that so far everything is on track to arrive as scheduled.
Okay, thank you for that, Hazel. It's good to know that there will never not be able an adverse effect on the incoming supply of vaccines. Okay, for the next question is for Don. Is it true that stock trend to provide positive returns the longer you hold on to them? Do we expect better gains moving forward?
Uh, it's a very good question, and I think I mentioned that a while ago that when you invest time with equities, it would usually give you positive returns now. And I would say usually because there have been times that it didn't now. But you can always think of stocks kasi as it's an evidence of ownership. Shares of stocks is an evidence of ownership of what? Of a business. So if you've invested in a business that actually earns money, then your stock price will actually go. No matter what the speculation is in that specific stock, no? As long as not over speculated. Let me give that sort of disclaimer. But as long as that business is earning and delivering what is asked of that company on a year-on-year basis, then you can expect that the stock will grow over time. No? So that will be my answer to that. It's on a longer term perspective, yes. We expect stocks that are given funding to actually deliver the earnings as requested. No, however, some stocks may actually fail in this uh, in this part. No, some businesses actually fail, and we can't blame anyone. Talagang it didn't fly, no, and that's why we encourage not investing in a single stock. So kaya collective investment schemes, UITFs, mutual funds, ETFs, those are the platforms that we actually go for when you're looking at equities. Yeah. Did I answer the question? Yeah,
Yeah,
I
I
think.
think
All right. There you
it
go.
is clear. Thank you, Don, for that. And for our last question for Hazel, what would be our outlook if we continue in this vaccination rollout trend where we expect 30% to 40% by the end of the year? What vaccines are said to last with the booster shots good for 6 to 12 months?
Well, to answer your first question, we're expecting a 34% growth for most of the companies under our coverage. So we cover around 42 companies, which are basically well representative of the economy. We've already factored in those numbers are already based on a 30 to 40% vaccination by year end. What has changed though is the government's strategy of not doing a blanket wide vaccination program and focus on NCR plus, which are the hotspots. These are the hubs where people enter, people exit. With that said, with them aiming to have 70% of NCR plus 8 vaccinated by November of this year, our expectation of a 36% growth for the companies under our coverage could actually surprise on the upside. Because right now, the government has indicated that as long as they vaccinate 120,000 people daily, they can reach herd immunity for NCR plus 8 by November. But now they're surpassing the target, right? They're doing 300,000 per day at the peak. And if they continue that, they could actually go beyond the 35 to 45% by year end. If that happens and the economy opens a little bit earlier than when we expected it to be, then definitely earnings can surprise on the upside. On the vaccination, in fact, I had a call with the FDA director, Mr. Eric Domingo, just recently, and he's saying that the efficacy rates of the vaccines is the question on efficacy rates. What was it that?
Well, it's about the expectancy of around 30 to 40% by the end of the year. So it's really more of the vaccination rollout.
Okay.
Mm.
Yeah. The second question was about, I think, efficacy rates, or
The
the last
booster
one.
shots. Yeah.
I think, yeah. I think like as I've said, right, with the FDA director's guidance, it's a different efficacy rate per vaccine. Sinovac is said to be 65 to 91%, AstraZeneca 70%, Gamaleya 91%, Pfizer at 95%. But again, the government is not aiming to vaccinate the people so that you won't get COVID. Basically, they're preventing death, right? I mean, we've already seen the latest numbers. I just learned that Delta is now 40 cases in the Philippines. They're expecting Delta to come to the Philippines. We're not expecting that to not happen. It's inevitable. And what the government is trying to do is to buy time and to have more and more people vaccinated here in the Philippines. With regards to the booster, same source, the FDA call we had last week is saying that there's no health there's no impact to health if you get a booster after you get 2 doses of Sinovac. If you want a booster for Moderna, that works, and it sort of increases your efficacy rates. But the thing there is, instead of getting the booster for yourself, it's better if another person who doesn't have the vaccine gets it, so that we get to the herd immunity and we get to, more normalized mobility. I guess that's, the main message of the FDA. Even if you increase your efficacy rate, if 5 or 10 other people is not vaccinated around you gets it, you will still get it.
Yeah, thank you for that, Hazel. Actually, that makes sense. Well,
Yeah.
I think that's it. That's all the questions that we have for our panelists. Again, thank you once again, Hazel and Dawn, for your time. We appreciate you being with us today and sharing with us those incredible insights and ideas. I'm sure everyone has learned something new from our discussion this afternoon. So thank you to both of you very much for your time.
Thank you.
you.
Happy to be here again. Hazel,
Uh,
thank you.
Thank
Thank
you
you,
also for
Hazel.
inviting. Stay safe, everyone.
Okay.
Okay, of course. We would like to thank everyone or attendees who joined in our session this afternoon. Thank you also to those who have submitted their questions. But before we end this session, we would appreciate if you can spend a minute or two of your time and answer our short survey. We'll be flashing our QR code on the screen. So just scan the QR code to access the survey. So please do so now. We'll also be posting the link to the survey in the chat box. Again, your feedback would be very helpful as we continue to improve on our webinar series. So please do take a minute of two of your time to answer our short survey. Okay. So that concludes our program. Again, on behalf of Trust Banking Group, I would like to thank everyone for participating in this exclusive webinar. Again, I am Lawrence. Thank you, everyone, and stay safe.